The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Crypto markets seem flat, but is that going to last for long? Joining us now to discuss the crypto markets is Matt Weller. He's Global Head of Research at Forex.com. Welcome, Matt.
Hey, thanks for having me, guys.
All right.
I think we have a little bit of a technical issue here, but
there
Matt,
he is.
There you are.
Hey.
Hello.
Hey, guys, thanks for having me.
Good to have you. So, of course, we've seen crypto volatility, particularly Bitcoin volatility, is now at a two-year low. It's something like 38% on an annualized basis. That's according to Blockware Solutions. That's some from data from them. In any other market, 38% is pretty wild. Of course, with crypto, it's not. Does this last forever? Are we going to see a big move coming forward?
Well, I don't think we'll necessarily see a huge move anytime soon. I think we're still working through the overhang of all the drama and the embezzlement, the stories that you guys talked about at the top. And I think that will continue to weigh on the space. But if we look longer term, some of the valuation ratios where we are in the 4-year cycle, those could put a bit of a floor under price as we head into 2023. So I think at least for the first half of the coming year, we might be in more of a range bound, slower trading environment as coins shift around slightly, but we don't see a major narrative emerge anytime soon.
But without that major narrative, isn't the part of the reason that wouldn't that actually scare away particularly retail investors who were attracted to it when they saw these large gains? Now that things aren't going anywhere and there might be better fish to fry somewhere else, maybe not bigger, but certainly better tasting ones, such as maybe a meme stock here and there or what have you. What would drive them back into crypto, if at all? And wouldn't this sort of exit from crypto into other things maybe punish the crypto prices, and particularly Bitcoin? I mean, that floor might be a lot lower than where we are today. We're hearing 9,000 as a potential floor, even lower. Do you think we could see those kind of prices?
I think it's possible. It would not be my base case at the moment, but I think you're getting at a very good point. And that's this most recent cycle is where we saw the greatest amount of retail participation, and all of those retail investors who maybe didn't understand the history of crypto and were just buying to make a quick buck. They've been burned, perhaps irreparably. So I think we just need the passage of time and the development of use cases, maybe the macro environment changing, something that will really start to entice those traders in. But as you kind of alluded to right now, it's hard to make a case. And we've seen maybe 10 to 12% of the US public get in on the most recent bull cycle, and a lot of those were Johnny-come-latelys that are frankly not going to be eager to get back in. So I think we're going to need a new compelling wave of use cases to drive people back, and I think the institutions as well will be a little bit more gradual, dipping their toes in.
You have some charts for us, one on Bitcoin's total supply. And if you take a closer look at Bitcoin long-term holders, they're reaching a record high. So what does that tell us about sentiment out there for Bitcoin?
Well, it tells us coins are moving from weak hands to strong hands. The long-term holders, which is defined as those who have held for 155 days or roughly 5 months, that's when studies have shown they're very unlikely to ever sell if you reach that threshold. That supply is now up to about 72% of the total amount of Bitcoin, and that's kind of a sign that perhaps a lot of those retail traders we were just talking about have left, and now the coins are going back to those strong holders that frankly might be holding for the next several decades. So I think that's really a bullish sign. That's essentially taking supply off of the market with the number of halvings we've been through, with an upcoming halving. I think traders might start to look ahead to Q1 or Q2 in 2024 for that halving cycle. I think these are signs that it'll just take a small amount of demand, given how little supply is truly liquid on the market, to support Bitcoin prices and potentially start a new bull cycle as we move into the latter half of 2023.
Mm-hmm.
And
Bitcoin is also near the historic trough of its 4-year halving cycle. Is that any indication of a potential bottom?
It could be. I think anytime you're talking about the historic record with crypto assets, even Bitcoin, the eldest of them, we're talking about a very short-term period. And notably, this is the first 4-year cycle where we've had inflation running hot, where we've had central banks raising interest rates, where we've had governments cutting spending. So I don't necessarily think this is gospel, but I think it's a pretty compelling chart that in this range, in the 4-year cycle, historically, we've seen a bottom, and that could be enough to at least support prices slightly and potentially keep us supported until we get toward that next compelling narrative and that next cycle, hopefully next year.
So, Matt, I do want to ask you about the global macro environment, because, of course, as you mentioned, we have central banks that are trying to combat inflation. They're raising rates. We haven't seen this in many years. My days as a forex trader were in the 90s, and that was definitely a different environment post Plaza, and now we have this post 9/11 world. Or post-financial crisis world. So how does crypto fit in when we look at what's happening on a global scale, when we look at these rising rates, and we look at almost competition for capital, if you will, with rising rates? Does the fact that crypto, particularly Bitcoin, doesn't pay dividends, it doesn't have rates, it doesn't, it has borrowing rates, but that market has completely collapsed, since the past few months. Does that, from an institutional standpoint, kind of scare off people from going into crypto, given that they have a potential of getting higher returns in other assets, such as U.S. dollars, such as even I don't want to say. Does that drive away the capital?
Sure. At the margin, it absolutely does. And we've seen that as a broad theme across markets. We've seen tech stocks that are growing rapidly but not making money and nowhere near paying dividends have gotten absolutely clobbered. Bitcoin, likewise. Ethereum, likewise. The meme stocks, to your point earlier, have all fallen. And the question is really, to what extent is that already priced in? And to what extent is it sticky? If we continue to see interest rates rise, which is not really the expectation for the second half of 2023. But if we do see that, certainly that would be a headwind for Bitcoin and the rest of the crypto space. But if we see that tide start to shift, if we're near peak rates, perhaps inflation falls pretty rapidly in the first half of next year, and we start to move toward rate cuts, if the economy experiences a negative shock that mandates additional stimulus, those are the types of narratives and themes that could return quicker than many investors are expecting.